Good evening. You're watching Rebooting India on NDTV. I'm Shweta Rajpal Kohli, and a big day today for all economic data. And if you've been following the economic news, industrial output data to be released shortly. So is consumer inflation or the retail inflation that will give an indication as to whether all the recent economic optimism that we've been seeing, is it going to be short-lived or is it something that we can carry through? So when are we going to see the industry truly recovering? That's the big topic of discussion on the show today. And if you want to participate in this discussion, all you have to do is open the NDTV app on your iPhone, iPad or Android phones and tap on the second screen feature. You can vote for the questions you want asked next, or you can even ask your own questions or upload video questions. You can even tweet your own views. That's our second screen application that you can get on your iPad, iPhones, and just log on to second screen and we will try and take your questions during the show. Let me also introduce our guests who will be joining us on the show today, so you can ask questions to our guests. Dr. Arvind Virmani, former Chief Economic Advisor and former Executive Director of IMF, joins us. Sumant, Sinha, Chairman and CEO of Renew Power, joins us from Mumbai, and well-known industry expert Sanjeev is also joining us from Mumbai. So we're waiting for that very critical industrial output data as well as retail inflation data to come in. But before that, a quick look at how the markets and the rupee have done today. Well, stock markets opened on a positive note but edged lower on back of selling pressure witnessed especially in banking shares, and as investors await the outcome of the US Fed Reserve's meeting next week. Ever since the Fed, remember, has indicated that it will taper its stimulus because of the recovery being seen in the US economy, there has been a flight of capital from countries like India. The Sensex finally ending down over 1%, snapping its 5-day winning streak, largely due to profit booking, ending 215 points in the red at 19,781. Sentiment also muted as the rupee reversed part of its gains. The Nifty fell 1.1% to end below the 5,900 mark. The rupee has clearly shown dramatic recovery in the past few days, has reversed its gains today, hovering close to the 64 mark to the dollar all day today, touching a high although of 62.92 to the dollar, but closing finally at 63.50. Traders in fact say the central bank may have sold dollars today to prevent further weakness in the currency. A quick note on gold, because gold prices today fell to the lowest in nearly a month due to weak demand. India is the world's top consumer of gold, and data showed that in August, India's gold imports had fallen drastically by 95%. Again, hopes that a US strike on Syria could be avoided and expectations that the US Fed Reserve will start to taper its stimulus had an impact on gold prices. Let's now try and bring you some important data with regard to both consumer inflation as well as industrial output. Well, it seems we've got data coming in for retail inflation, and that is at 9.52. So it has in fact come down slightly from July's 9.64. Industrial output data, we're also awaiting the industrial output data. That is actually much better than expected is what I'm being told. July industrial output at 2.6%, August retail inflation at 9.52%. Industrial output data for July at 2.6%. Let me go across straight to Dr. Arvind Virmani to get a sense of what industrial output data of an expansion of 2.6% is clearly very good news coming in. Dr. Virmani, we were expecting industrial output to contract.
Well, IIP data is notoriously fickle, so right. I really wouldn't go on 1 month's data, but yeah, any silver lining is good news. I mean, it's always good to hear positive numbers these days. As far as CPI is concerned, I think one has kind of been expecting that CPI would remain between 9 and 10%. And again, the silver lining, I guess, is that it's not jumped up. If you recall the last numbers, the seasonal factors like onions, temporary factors have pushed it up. So I don't really expect it to go down sharply till the harvest comes in, or expectations of harvest come in.
All right, the tide clearly seems to have turned with regard to economic data that we are seeing coming in. Tremendous cheer there with industrial output coming at 2.6%. Sumant, your thoughts? Most economists had expected that there would be a contraction, but here we are seeing positive economic data coming in, and this coming after we'd seen some very positive trade data coming in just a couple of days ago. Rupee showing some strength. Of course, today was not the day to say that, but we've seen tremendous strength coming in on the rupee in the last few days. So can we simply start saying that the worst is over?
You know, I wouldn't jump to that conclusion yet, Shweta. Although obviously we would all hope that the worst is absolutely behind us. But you know, I think that sentiment is apart from the IIP numbers also being fickle, sentiment is also fickle, and I think what we are seeing right now is just a yo-yoing of people's optimism and pessimism coming around. And I think we really have to wait and watch. We'll probably have to watch data for the next few months as well, and see how things evolve. You know, if you ask me structurally, I think there are still a lot of problems in the economy, and notwithstanding the current burst of optimism, I do believe that it's going to take a little bit longer for the Indian economy to really start turning around. And then the problem is that we run into the elections, and you know, that causes its own set of uncertainty. So I would really hold my horses right now, Shweta.
Sanjeev Aga, your sense of what's really going on right now, because we've seen a spate of terrible economic numbers coming in, and there are some like Sumant who clearly suggest that there are structural weaknesses right now in the Indian economy. At the same time, as Dr. Virmani said, we always look for that one silver lining, and in this sense, many really hope that yes, this would be the turning point now for the Indian economy. We've seen it hitting terrible lows when it comes to all macroeconomic indicators, and here on it will be on a firm path of recovery.
You know, to answer your question, you know, everyone has to decide for himself or herself what has caused us to get where we are from where we were 3 or 4 or 5 years ago. And in my assessment, the panic-driven free fall we were witnessing for the last 1 month has been stemmed. Sometimes what happens is, if you lack faith in a country or in an economy, you keep hammering the currency, and then you get into a virtuous cycle, and things get panicky. So I think we've just been able to stem the tide. But Sumant was calling it structural problems. I have my own assessment, and I think the problems relate to very poor policies in our line ministries for the last 4 or 5 years, where I would say extraordinarily bad management has led to a certain type of people getting attracted and the better type getting repelled, and then all this hit the ceiling, and decision making went into seizure almost like an engine does. So all this has led to some kind of an investment holiday, a plan holiday which we used to have in Indira Gandhi's time. And these kinds of things have their impact 2 or 3 years later, and we are facing that impact right now. So you're finding that consumer products are not growing as fast as they used to, but capital goods and some of the products like autos are actually contracting. And there are job losses, let alone you know, new jobs being created in the auto sector, in the telecom sector, in the mining sector, in the construction sector. There are job losses. So I think we've just been able to stem the tide. I wouldn't say we are anywhere close to bouncing up. A lot more needs to be done to make that happen.